CPA and tax accountant in private practice. Welcome to my channel. My goal is to inspire entrepreneurs and educate taxpayers. So if either of those agendas inspires you or interests you, please do like and subscribe, and feel free to share these videos so that other people might also be inspired or educated. So today's topics are, as I promised, to talk about the SALT cap tax and my free summer seminar for teens for my clients, and when to do a paycheck checkup or check in on your tax liability for the current year. So let's start with the SALT cap tax. So the SALT cap it stands for state and local tax. So there used to be a deduction for state and local taxes on your federal income tax return. It is now limited. So you can deduct a portion, but not all of your state and local income taxes on your federal income tax return. And let me tell you why that matters. Out of $1, just $1 that you pay taxes on, let's pretend this is a pre-tax dollar. You have not paid tax on this dollar. You pay, if you are in my great state of North Carolina, you pay, let's say, 5 1/4 state income tax and 7.5, 7 1/4% sales tax, depending on where you live. Now, what you have left here after you pay these state and local taxes is 87 cents. Constitutionally, you should not be double taxed. You should be only taxed on the federal level on that 87 cents, 87.25 cents. But you're not. You're taxed on the whole dollar on the federal level. So that little bit, that 15% that's already been taxed on the state level, I guess it's not 15%, it's more like 11, that's already been taxed on the state level, you're getting taxed again, overlaid on top of it. So it's not the same pennies or dollars or thousands of dollars are getting taxed twice. So that's why the SALT tax cap matters. And it's gotten very politicized too. Many news outlets seem to be reporting that the SALT tax cap benefits somehow lower income taxpayers. Just because a taxpayer doesn't necessarily take that deduction doesn't mean that it benefits them. Yes, if you pay less than $10,000 in state and local taxes, you're not really affected by the SALT tax cap. But if you live in Texas, where you pay exorbitant property taxes, or you live in my area of town where property taxes are a little bit nuts, and you pay state income tax, and it really will start to add up. So yes, middle class families are affected by this. Another way to look at it is, let's imagine you wanted to buy a $1 Hershey bar. I don't have my notes up in front of me. Oh goodness, I was going to print those out before I started this, but I'll wrap it. So this $1 Hershey bar, how much do you have to make before tax to pay for a $1 Hershey bar? If you're self-employed like me, you have to pay 15% FICA. Now, if you're not self-employed, you pay half of that and your employer pays half of that, so 7.5. But if you're self-employed, you pay 15% plus your sales tax on it, plus your state and local tax, 5%. Some states are high. North Carolina is a fairly low income tax state overall. It tends to be high, but for the income tax, it's somewhat low. And then you also have, let's say you make $200,000 as a single person, your effective rate, which means when you average your first dollar and your last dollar, your effective rate's 20%. So all of this is taxed. What was that number that I had? 20 plus 15 plus 5. You want to do that math in your head. So when I backed into it, what you have to make pre-tax to pay for a $1 candy bar, $1.97. If you're a single person, the tax brackets vary depending on what your filing status is and how many people in your household and things like that. But a single person at a don't know what the incremental rate is to get it to an effective rate. We maybe should do a video on what the difference is between an effective, incremental, and different tax rates, because it matters. The brackets matter. But still, to think that you would have to pay or make nearly $2 just to buy a Hershey bar, I think that's a little insane. So for the salt tax limits, I did go ahead and write a letter. It is attached to this email. If you get this video through my email directly, it is in the email. If you are watching this on YouTube or some other social media outlet, feel free to go to my site, topdog.tax. There'll be a pop-up there that'll say, if you want this salt tax letter, just enter your email and it'll automatically send it to you. Print it out, sign it, send it to your representative. There's also links in the email, and I'll put it in the video too, for how to find your representative. Really very easy to find your representative and hassle them. I don't know that they get hassled that much, honestly. Whenever I do reach out to my representatives, they're pretty awesome about reaching back out to me, which tells me either they're wonderfully staffed or they just don't have a lot of constituents bugging them. So talk to them. So, second topic, got that covered if you're not my client. Get the alerts. Once a year, my existing clients are eligible to do a free, what my husband calls a paycheck checkup, where you let me know what your income issues, what your household changes have been during the year, and we look to make sure that you're on target. Some people want to do it to make sure that they're not over contributing, that they don't get a big refund. Some people don't want a big refund. My last video, I went into whether or not that's the right thing to get a big refund or have a balance due. Maybe not have a balance due. That's definitely arguable. But some people want to break even. Some people want a big refund. But to know what's happening there, so we do a paycheck checkup. I've also mentioned that we don't really know what changes are going to happen this year. Every administration brings changes. We thought Biden had changes ready to go right out of the barrel. Yeah, right out of the barrel, that's the right term. But we haven't seen anything, and here it is, the end of June. So even if they passed legislation, let's see, mid-July, because they're not going to do it next week, 4th of July week, we'd still have to get revenue rulings on it. We'd have to study up on it, prepare it to implement. So all that to say, I don't like doing forecasts when we don't know where the target is, because we literally do not know where the target is right now. But I don't know that we have much of an option. So if you do want to go ahead and do a paycheck checkup, we can do that. That will count as your one. If you are not a client of mine and you want to do a paycheck checkup, want to see where you are, you can reach out through our website to schedule an appointment. There's a fee for those if you're not an existing client. We might need to do it again. Biden's administration has said, especially on things like capital gains, that they're going to make changes, and it's going to be retroactive to January 1st, but we can't possibly know what those changes are going to be. It's a challenging time. It's a challenging time for you guys too, but yeah, you can't hit the target when you don't know where the target is, and that stinks. So unfortunately, we can just go ahead and do it, even though we might not know what the target is. So last topic, the free tax workshop. Every summer in July, I like to do a free tax workshop for my clients who have teen children who, and where did I put my checklist? Oh, there it is. It just fell off. For my clients who have teenagers who may be working. So there are some limits on this because it has to be a basic return. And so I coach them on how to prepare a basic return. I think it's really important that individuals know how to do this, that they know what they're looking for. Reviewing the output is really important. So the things that need to happen, the child needs to be your dependent. It can't be your 30-year-old son that doesn't know how to do his taxes. He's got to be, living in your house, full-time student, dependent. He can only have, or she can only have, earned income. No stock investments on behalf of grandma that's in the child's name or anything like that. Can't have unearned income. Has to only be earned income. And the class is going to be July 20th at 9 a.m. Takes about an hour and a half. We have coffee. We'll probably have bagels or something. You need to RSVP by July 15th so I know how many to expect. And your student will have to bring with them all their W-2s, even the ones that might not have withholding on it. But do keep in mind, if they don't have withholding in box 2, they might not even have a requirement to file. And the goal is that if they don't have a requirement to file, we have nothing in that box 2 on the W-2. So July 20th, you need to RSVP by replying to this email. So this is only for my clients. If you're viewing this on YouTube, sorry. Guys, I just can't have everybody on YouTube over to my house. But so just reply to the email. If you are local and do want to sign up for this, maybe you can reach out via email and see. Maybe there's grace for those who are coming on as new clients. So, but I hope you guys are doing well and that you have a wonderful and safe 4th of July. And again, if this content was helpful, useful, informative, inspiring, well, I know this was not a terribly inspiring video this month, but some of them can be. Please do like, subscribe, comment, share. It really helps get the word out so that other people can be educated about some tax issues as well.